2 days post-halving, and Bitcoin seems to have decoupled completely from traditional markets. Despite the Fed's ominous warning, Bitcoin seems completely unfazed. But have we reached a local turning point in the cryptocurrency markets? Find out in today's exciting episode of Breaking Bitcoin. Welcome back to Breaking Bitcoin. We are live every day at 12 p.m. Central Standard Time. This is your daily source for everything cryptocurrency markets and personal finance. I'm your host, Justin Wise, lead analyst at CrackingCrypotcurrency.com. Hopefully you guys are doing absolutely fantastic today, wherever you happen to be tuning in from, whether that's YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. We are broadcasting to you live from the above ground, sanitized, quarantined, above ground bunker. Today is May 14th, 2020. Of course, if you are tired of watching the price from the sidelines, trading with your gut, or being disappointed by the latest calls from crypto Twitter, there's never been a better time to join our community of traders and begin building your own objective, data-driven strategy. You can take advantage of our community and one-on-one mentoring, our premium indicator suite designed to take the guesswork out of trading, our verified trading signals, and much more. Sign up at premium.crackingcryptocurrency.com for a 7-day trial, or click the link in the description down below. Before we begin with today's show, of course, make sure if you have not already to go check out my interview with Dr. John Ehlers. Fantastic discussion of backtesting, forward testing, strategy creation, and digital signal processing. Also, if you haven't already, make sure to check out our partner Spectre Security Coin's Data Hunt event. You can sign up, participate, learn a whole lot, and win some free crypto in the process. You can sign up at datahunt.spectresecurity.io, and I will drop a link down in the description if I have not already. That's datahunt.spectresecurity.io. All right. Now, a lot to talk about. Let's get right into the charts because I want to get into today's price action because obviously we've got a lot to talk about. Let's go. All right. Let's start with the daily time frame of Bitcoin, and we'll just bring this up as we talk. So it is day 3 post-halving, and Bitcoin is showing continued decoupling from traditional markets. Just for reference, let's go ahead and take off indies here for a second. Here we can see Bitcoin over the last 3 days stair-stepping itself up nicely. And for comparison's sake, here is the ES. These are the SPY, the S&P 500 futures, doing a little bit of opposite stair-stepping, or like stair-stepping to the downside, right? Now, the SPY and traditional indices and stocks are continuing to sell off as Bitcoin, as I said, continues to stair-step its way up. Now, this comes despite the dire warning from Fed Chair Jerome Powell 2 days ago that he expected extended weakness in global economies. Now, Bitcoin has surged while traditional markets have tanked. A very interesting, a little unknown side note. If you pay attention to Bitcoin mining, a new private miner with a very large hash rate share has made themselves public. They're holding the domain name lubian.com. That's Lubian.com. They have a hashing capacity of about 6 exahash, and that's about 5.7% of the overall hash rate of the Bitcoin network. Now, this unmasking moved them from unknown into the top 5 rankings of Bitcoin miners. It's not clear where they came from. It's not clear if they were a BCH or BSV miner prior to moving over. Unclear. And the reason why this wasn't really trumpeted or hurrahed very much is because overall hash rate in the Bitcoin network actually has not increased. We have seen it continue to decline day over day since the halving. Now, looking at the broader market, this is trading against BTC. Let's look at USD, trading against USD. As we can see, pretty green day. It's been several green days for our altcoins. Altcoins are trading into the green. but they are showing weaker performance than Bitcoin, as we can see when we compare them against BTC, meaning that with a few exceptions and with a few, intraday volatile trades, it has been more profitable to just hold Bitcoin. And we can see this from Bitcoin dominance staying above 67%, with another daily increase as of right now, up about 0.3% again. One notable exception, it's not very evident here, but NEO, which is one of my... thank you, Peter, for noticing the typo in the stream title. We will change that. NEO, one of my long-term holds, is one of the stronger performing top cap altcoins of this week. Just feel like mentioning that. Now, yesterday, the Tether Treasury did mint another 100 million tethers, causing the market cap of USDT to briefly overtake XRP as number 3 in the top 10 cryptocurrencies. And it is important to note that I have noticed, and this is just in metrics that you can see from anywhere really, major exchanges have been increasing their reserves of USDT recently. Now, after that, that's fact. But where we go from there is speculation, right? Why would exchanges be increasing their USDT reserves? Well, one reason is that they anticipate increased selling of BTC and or other assets into USDT. So they need to have enough supply on hand to be able to match those orders. That's probably the most popular reason. One other possible way that you could, that would be a bearish indication, right? Because they anticipate increased selling. So they are, willing to take on the hold of the Bitcoin and the other crypto assets rather than the individual speculators, again, because they are anticipating increased sell side pressure. And the OTC desks are increasing two-way BTC flow over the last 3 days from institutional funds and from high net worth individuals. I don't really have a better narrative than that. That really seems to me the only reason why exchanges would stock up on USDT. The other reason, which is less sexy, is that they just anticipate more trading activity, more retail interest, which could be construed as a bullish sign. From my personal opinion, I would expect that they anticipate to see increased sell-side flow because that would be in line with what the OTC desks are already reporting. Keep in mind, the desks are reporting two-way flow, which means BTC and USDT, and payroll flows on USDT are down quite a bit, operating at about 40% of capacity. Now, I wanted to point out, we'll go over here and look at Glassnode. This is the 7-day moving average, and yesterday I was looking at the raw. Okay, so exchange net flows, new data from Glassnode does contradict my opinion yesterday a little bit, that exchange inflows and outflows have been relatively equal. We can argue, who was right, who was wrong. Clearly the data seems that I was wrong. There was a little bit of scrubbing of the data, skewing of the data, because of the increase in exchange inflow in the day pre-halving and the day post-halving. But when we look at it, particularly if we look at the, again, 7-day moving average, which is designed to kind of smooth this out, we can see overall that net outflows from exchanges have been increasing, right? Outflows have been dominant, with the 2 days, as I said, pre and post-halving, skewing the data somewhat. Now, typically, this is a bullish sign because investors withdrawing Bitcoin and other crypto assets from exchanges signals that they are moving those funds into cold storage for the long term in anticipation of a protracted or long bull run. Typically, investors would be moving their funds onto the exchanges if they were anticipating a significant shift in market trend and they wanted to offload their Bitcoin. What other reason do you deposit your Bitcoin onto an exchange rather than to sell it? And it doesn't really matter what you sell it into, whether, you make the argument that, well, maybe they're selling it into altcoins. As we'll get here into a little bit, a new report from Coinbase is indicating that about 75% of all of their clients, after making an initial purchase of Bitcoin during a bull run, will move into other crypto assets. This is pretty natural, right? You get in with the gateway drug of BTC, and then you get on the hard stuff. You know what I'm talking about. EOS, Ethereum, Litecoin, Ripple. However, having said that, it's still bearish because you are still moving your funds onto an exchange to sell them. Whereas if you're pulling your funds off of the exchange, then you don't have any intention of selling them for quite a while. And again, this does fit in line with my sentiment as well, expecting a dip in price. That is my overall expectation, that we're going to see a short-term dip in price, followed by a nice protracted bull run that will actually crest and break above the previous all-time highs, particularly with the economic climate that we're existing in, regardless of which side of the argument you fall on that from. But we can see again here, I just wanted to point that out, that exchange net flows seem to be moving to the downside. All right, another thing that I wanted to point out before we get started here, and this is that tweet from Glassnodes that prompted me to mention that this morning. As they say, in the hours before and after Bitcoin's halving, exchange net flows decreased significantly. So far, however, the event has had no impact on 2020's trend of investors withdrawing Bitcoin from exchanges. And they're using actually a daily moving average, and you can see the time of the halving and you can see overall net flow moving to the downside, which indicates increased outflow. Now, the community is a little bit of buzz. Something that we've mentioned a whole bunch of times on this channel is that this is new research coming from Elliptic. They're a blockchain analysis company. Shows that Bitcoin transactions used to fund illicit activities remain below 1% of all transactions on the blockchain. This is a nice feather in the cap of our cryptocurrency markets, because I don't think that traditional fiat can claim such a small number. You know, as infamously stated, far more crime has been done with Benjamins than the blockchain. And as I said, we will get into Coinbase's blog article and the correlation between Bitcoin purchasers and altcoin purchasers, and kind of showing that progression of trend, as I kind of humorously said just a few moments ago, moving in with the gateway drug and getting onto the hard stuff. But you see this in traditional markets as well, right? Traditional speculators, anybody that's going to start investing will start off by purchasing index funds or mutual funds, and then they'll get into wanting to pick their own stocks and, buying REITs and, asking at the water cooler, how do you short sell Tesla, right? So interesting stuff, just a natural progression as people get out there and take on and get involved with more complex financial products and derivatives. Kind of notable mention right here. Oh, thank you, Forbes. I have turned off my ad blocker. Ha sucker, I didn't turn it off. Reddit is this is considered huge news. I know that Altcoin Daily made a big deal about this. Reddit is launching their own cryptocurrency project for native Ethereum tokens to be used as community points on their subreddits. These tokens are going to be stored in what they're calling the Reddit Vault. This is a wallet that is incorporated into Reddit's mobile app, both for iOS and Android. Now, these are Ethereum native tokens. That means they can be transferred to any ERC20 compatible wallet, and I assume listings will follow swiftly on exchanges, particularly decentralized exchanges. The two initial subreddits that are going to be launching with their own native token for the subreddit are r/cryptocurrency and r/Fortnite with the Moon and Brick tokens respectively. So you caught me again, Forbes. You did it again. So now one last thing too. This kind of goes out to the I don't know what do you want to call it to people like me. For those interested in the economics of Bitcoin, this is people who have read the Bitcoin Standard and are really into the inner workings of these things. For those interested in this, one popular opinion against the money printer go burr situation that we're currently seeing is that we're seeing an emergence of what could be called the Cantillon effect. All right. This is a great article from the Austrian Center. I have pretty much worn out, kind of like an old book, a lot of articles on this website. However, basically describe briefly, the Cantillon effect is where it appears that in the modern context, that what the United States government is doing to stave off the effects of the coronavirus and economic disaster is taking money from people that actually need it the most, that is Main Street, and retail individuals, so average citizens, and pooling that money through usury because they're printing money which devalues that, and then they're creating treasury grants, and moving that into markets and giving it to individuals who theoretically should be the most protected against economic downfall, that is large corporations and companies. Now, keep in mind, this is something that we've covered on this channel before. If you are a large corporation, there is nothing that would annoy your shareholders more than hoarding cash, right? This is just the economic model and incentive that we've created, because if you are a shareholder of a company, then the company, remember, has a financial objective. They have a fiduciary duty to raise the value of the company and return profit to the shareholders. So if you are a shareholder of a large corporation and you see that the company is hoarding cash rather than buying back stock, which would increase the value of the company and also give the ability for the shareholder to actually make more decisions with the company, then this is not what you want them to do. And this is why we have the situation where companies, even large corporations, aren't actually well protected against economic downfall. It is not, I would say, the greed of the individual corporation. It is the game. It is the economic game that we have built around them. Now, in conjunction with this, senior analyst Alexander brought up an interesting point with regards to the United States being in a unique role as a provider of global liquidity, because our national currency is also the world reserve currency. Now, this is known as the Triffin dilemma. All right. So the Triffin dilemma is where, just quoting the Wikipedia page here, is where the economic interests that arise between short-term domestic and long-term international objectives for countries whose currencies serve as global reserve currencies, meaning that for those of us, particularly those who ascribe to a more libertarian and balance the book type of economic model or objective for the country, is very contrary in actuality to the global, let's say, non-sovereign role of the United States currency as a world reserve currency, because we have the onus of injecting liquidity into international markets as well, because we have to provide the excess liquidity for other central banks and other reserve banks to hold the United States dollar, particularly when we have the petrodollar situation and SWIFT, where all SWIFT and petrodollar transactions have to be settled in United States dollars. Basically, all massive international trade needs to be settled in dollars, and that puts the onus on the United States to actually print more money, which is contrary to our domestic agenda of having monetary stability and fighting against a large inflationary rate. So again, it's very interesting. The reality is that the economic realities are not black and white. These things are complicated. So I just invite individuals to definitely check this out if they are interested in going down this rabbit hole, and leave your comments in the section down below. Probably like 5 of you will leave a comment down in the section down below, because this is probably boring to the majority of you. But these are the things, for example, that the creators of those who steward the security and the monetary policy of Bitcoin moving forward have to consider. And this is also just important for you to understand. You want to have a strong opinion about these things and a realistic opinion about the world, rather than, having a hierarchical mindset and just ascribing to whoever kind of comes to the forefront, saying that, well, I am confident, I am a charismatic leader, and let me tell you what you should believe. Because the majority of human beings tend to think that way. There are, a few individuals who are non-hierarchical and who don't like being told what to do and who like to think for themselves. And most people think that they are that way. But when the chips hit when the chips hit the table, when people go all in, when reality hits the ground, societies nowadays have tended to train individuals to think very hierarchically and in terms of leader domination and subservience, listening to what's being told. With that being said, let's get into today's price action. All right, so Bitcoin did fill the CME gap. Bitcoin currently trading at 9,646, our third consecutive day to the upside here. We will see how the daily closes. No bottom feeder signal. If we look at the BB initiator, we are signaling a daily signal to exit shorts. We have also crossed above the baseline, which would be an indication to close hedges. We are still in the entry qualifying zone. And this brings us to a very kind of interesting place in price, right? This brings us to a very interesting place in price where we closed below, for my strategy anyways, where we closed below the baseline, and therefore we went hedged, and now we have done, we've basically just moved to the upside. And this kind of confirms, or at least gives credence, at least anyways, to those who took the CME, reversal baseline bounce, and also those using for example, the EMA 21 and the SMA 23 baselines from the results of their own backtesting, they've actually had successful reversal baseline bounces, because what did price do when measured against those baselines? They just came right back down to it and bounced off to the upside. So again, first off, congratulations to those individuals who had winning trades. Check out the CME on BTC, fill the gap, and know how. Yeah, so we'll look at the CME gap here in just a little bit. And this brings us to kind of an interesting price area. And I want to go down to the lower time frames, and I'll be able to kind of build my argument more succinctly here. If we take things at face value and just trade a very simple default strategy, we would be going spot long on BTC here right now. Now, when we actually ended up and where did we actually end up closing above the daily baseline? And this is where, full credit to him, trading exactly the way that he's supposed to. This is where Alex closed his hedge out on this daily candle, yesterday's daily close at 93.15. And so far, he is up, and again, all the premium members following with him are up 3.77%, whereas I particularly am down another 3.77%, but that's okay. I've got a plan. So we've closed above the daily baseline. We've actually cracked the BB initiator to the upside, and we kind of get into this very interesting area of price and filling the CME gap and pushing down from there. So overall, the daily time frame is fairly consistent. Yesterday, MVIX actually signaled for a buy signal on the daily time frame. Wadatar explosion did not give the confirmation to the upside, and we also hadn't cracked the BB initiator, so I don't really see the objective signal to put on at risk. But of course, those who did or triggered, kind of jumped the gun early were rewarded for that early speculation. Parallax for me is very interesting, and this is overall what I will be following. Because Parallax has not flipped to the upside. Kind of the next several days of price action I am watching, because this is a very interesting area of price. Let's get into, and we'll be able to kind of make this case a little bit more clearly on the 2 and the 4 hour time frame. On the 4 hour time frame, this is exactly what I pointed out last night as I was going to bed, is the reality of MVIX really pushing up into the overbought territory here on the 4 hour time frame. And actually, finally, right here on this previous 4 hour candle, actually giving what would be considered the MVIX exit signal. So let's just take a look here and go into line cross. Let's see here. I should be signaling up here, actually. I have to push that. I want to scrub that. All right. But we can see here that MVIX reached above OB levels and crossed back underneath right here. This is a classic kind of MVIX reversal signal. So on the 4 hour, on the 2 hour, not yet on the daily. The daily is just pushing up into the bullish control zone. But on the meso time frames, we are in overbought territory, which made me very nervous about unhedging at these kind of accelerated prices without seeing a pullback. And having the kind of guidance on this trade that I talked about. And again, this is, we talked about this in the community mentoring session yesterday. So I want to give full credit to everybody that is just following through on the objective strategy that they laid out. I want to look at the 2 hour here too. Of course, as we can see, Cybot being quiet on the 4 hour time frame. Conditions aren't just met. Cybot being quiet on the 2 hour time frame as well. And of course, no bottom feeder signals, because we're nowhere near the bottom here. We're at quite the opposite of the bottom. We're at somewhat at the top. Now, obviously, the price action over the last, let's say, 8 hours has been interesting, as we have kind of topped with this large candle to the upside. And we'll see this here in just a second. Again, we can see this reversal candle right here, and price is consolidated, unable to break above new highs over the last, let's call it 8 hours. Now, the 45 is very interesting, and this is where my current trade setup and thesis is being played out today. One thing, and I commented on this in my analysis over the last several days, was watching this indicator, this premium and index indicator, which shows when there's backwardation on price, which indicates aggressive selling. And as we can see, basically, throughout this entire accumulation cycle, and again, one thing I want to point out is these 3 long wicks to the downside, indicating pretty heavy absorption of price by buyers. So we can see here that because of the backwardation on price, backwardation means that the price on BitMEX was lower than the index price, which can only happen if there's aggressive short selling going on. We can also see that predicted funding was also a majority negative throughout this entire period. And very briefly flipping to the positive side, and that generally heralded a short-term reversal in price. We see it here. We can also see it here. We can also see it here. We can also see it here. So again, not drastic pullbacks, particularly here, but you can definitely notice the difference, right? You can notice the difference. When backwardation is fairly extreme, price is moving to the upside. And finally, and we can see these examples moving back. If we see when there is a sharp premium on Bitcoin's price, we finally start to see that pullback. And when the funding goes, when the premium slips into backwardation again, what do we see? We see price begin again to move to the upside until we get positive, until we get a premium again on price. And that is generally where the market tops. And this is just indicative of trade psychology. Individuals are aggressively buying local tops because they feel that Bitcoin's price is going to continue to run. And retail participants are aggressively selling into local lows because they think the price is going to go down. Generally, the opposite occurs. So I was nervous last night about holding my hedge, my personal hedge, because of this backwardation on price. And yes, price continued to run up. Price ran up all the way to this kind of original target when I was talking about reversal longs out of this bottom coming from the bottom feeder signal. Up here at filling this, not only filling the CME gap, but also tapping this untested point of control from the initial sell-off that we had on Sunday. Well, that has been filled. That has been filled. And what do we actually see at resistance, which is probably the most important resistance level that we've seen this week? Not even the $10,000 psychological resistance, although we nearly came close to that. On CME, we actually did. Over here on ByBit, we did not. And on Spot, we did not. We see a couple of things. First off, we see a sharp premium. We see us go from basically flat, no premium or backwardation, into a very sharp premium on the very candle that so far has marked our local high. It's also a fairly negative candle, long wick to the upside, indicating heavy buy-side absorption from limit sells that were placed in that area. A lot of liquidations to the short side coming in on that candle. And so far, we have found resistance at today's point of control. So again, and I know that I may sound like a broken record, but again, just looking at this, this is a very not good place to be going long, in my opinion. You would be longing into resistance, which is what the entire rest of the market is attempting to do, because we have finally slipped into a premium on price after we've seen heavy buy-side absorption from limit sells placed in this area. Now, I'm not saying that we can't break this level and actually push to the upside, but it does seem unlikely in the short term without a pullback, which does give anybody that is in a short position kind of an opportunity to get out at a better price, or conversely, to be more bearish and assume that you're bearish trade thesis will play out here and actually get lower prices. Now, we do have two logical targets that may take a while to get to. And of course, these are the two untapped points of control down below us. And remember, a high majority of the time, we retest and tap these untested points of control. Everybody wants to talk about CME gaps. Points of control are a very similar kind of trade prognosis and thesis. A very not good place. Yes, that's a very technical term. So this is a little contrary to what I do, and I understand if that kind of confuses people, that's totally fine. But I've tried to lay out my justifications and argumentation for this trade as best as I can. I am in a short. I am in underwater shorts, and that's totally okay with me. I have a thesis on this trade, and I'm willing to play with it, and I've managed my risk appropriately so that if I am completely wrong, I know what my max downside is. But that's what I estimate. I estimate to see price find resistance here at the $9,800 level. And for us to travel back down to the 90.98, potentially even the 87.53, and we will see from there. One discriminating factor that might invalidate that, one thing that I am watching and that I think individuals should be watching as well, is the weekly close. So for this, let's go over to the long-term analysis of BTC here. One thing that is discriminating, this is going to be the weekly time frame. As you can see, we are consolidating in the weekly red box territory. This is the area of resistance. Remember, previously, everything that's been in this box and above this box for the last 2 years has been a good area to sell off BTC. This will be our fourth test of this long-term resistance area, right? This will be our fourth test of this long-term resistance area. And it's my opinion that if we are to close a weekly now above 10,200, that would be a fairly bullish signal. I think that would be a breakout worth taking. And I know that that actually in and of itself is contrary to what a lot of analysts believe, but that's what I would like to see. That's the technical invalidation that I would like to see. Failure from this area might move us back into the yellow box territory, or it just might move us back down to the lower band of 8,000, which is, again, roughly where I'm targeting on this movement to the downside. That's actually a little bit more. That's a bit more of an aggressive movement that I would like to see. Again, if we return to that 45-minute prognosis here and look at this current trade setup, it's just to the upper 8,000s, right, which would be the lower 8,700. Now, this area I've also set to take some profit here at the $9,000 area. This would be interesting to see if we can reestablish this as support, but that's why I'm taking profit there. And we'll just see what the market decides to do. Again, I think a lot of people, unfortunately, one thing that I've seen over the last week, unfortunately, is a lot of traders trading with their gut and not really like letting the levels and letting price guide them and show them which way they should go. And this is also going to be, as I said, I made this post yesterday when I was talking about IsaSpot. IsaSpot often comes in phases of 3, as we can see here. 1, 2, 3. We don't really see the 1 here, but there's 2 here. And we can see here this triple bearish divergence from the IsaSpot as well. Higher high on price, lower low on the oscillator, higher high on price, lower low on the oscillator, and now attempting to break through the local support that we've established at 9,600 while receiving rejection from today's point of control at 9,700. So watch this fairly closely. Of course, anybody who longed the dip, this is a fantastic area to be taking some profit, drilling stops, locking in that. But again, I think looking at overall price, this is a very logical area to just appreciate your successful trade. And, you know, again, you've had about a 13% trade here so far, locking in at current price if you accumulated anywhere in this heavy absorption area. And enjoy the profits from that successful trade. All right. Let's see, we covered Bitcoin on multiple time frames. We covered the broader altcoin market. I know a lot of individuals are heralding and trumpeting and calling for alt season. And there are going to be some indications that we can watch, I think, that have been more successful than others, in my opinion. The main one is going to be pretty simple to watch here, and this is going to be BTC DOM. BTC.D is the ticker symbol. I think that alt season is going to be, if we end up having alt season, we can see Bitcoin dominance if we end up cracking basically 67 on Bitcoin dominance here and trading below the daily baseline on Bitcoin dominance. Right now, we're all the way up at 68.44. We had a brief decline for a few days and did see altcoin surge. And now we are back on the rise again as Bitcoin dominance increases. And again, this happens both at local bottoms and at local highs in Bitcoin's price, particularly, and also when Bitcoin is bullish as well. There's only a few kind of interesting areas where we do see broad scale altcoin run-ups, and typically those almost always occur when Bitcoin dominance is bearish, i.e. below the daily baseline, which we are not. We are trending above it. We are quite high above it. This reversal was pretty interesting to catch. But we're actually seeing continuation long signal on Bitcoin dominance. So again, watching this metric closely and watching to see if Bitcoin dominance could get back down below 67%, I think would be an interesting initiation signal to be a little bit more speculative on altcoins. Until then, I'll just be watching the daily time frame. And again, even with a lot of alt BTC pairs at near or close to all-time lows, I would still be a little speculative at this point in time. Again, if Bitcoin dominance continues to rise, as I've said a couple times, we can continue to see lower lows on those altcoins. Altcoin season could be like concurrently with duck hunting season. Pull! Good to see you, Philly from Manchester. All right, with that being said, I want to get into the news for today. Let me know if you guys have questions. Leave them in the chat. The moderators will bring my attention to them, and we can discuss that in the Q&A section. I also want to make sure that we do something nice for everybody watching on DLive. So let's put some lemons in this basket, Street League. Thank you so much for the follow on DLive today. All right. Also, guys, remember, if this is your first time to the channel, to hit that subscribe button and the bell icon, because that is the only way you're going to get a notification that we go live, and we go live every day at 12 p.m. And sometimes we just go live. Sometimes we just post content. You'll never know if you're not subscribed. And subscribing doesn't even work. You got to hit the bell icon. That's the only way it works. It's the only way you can do it. And if you hit the thumbs up button, it really does help the channel out. So please take the time to smash that like for us. Lets us know that you appreciate the content and actually does help us battle the Google algorithm to actually get out there in the feed from time to time. Hard out here for a content creator. Thank you guys. Appreciated it. All right. With that being said, let's get into today's cryptocurrency segment. Let's go. All right, here we are. Now, the latest data coming from Coinbase reveals that Bitcoin may be the first popular go-to choice for cryptocurrency investors on their platform, but it is during bull runs that most of those initial investors will end up filling their bags with altcoins. Now, Coinbase published this data on their official blog yesterday, and in it, they explain how although 60% of their users will buy Bitcoin as their initial purchase, only 24% of them will stay with Bitcoin only over the lifespan of their account. Overall, their data shows that more than 75% of investors will end up buying other coins as well, with Ethereum and Litecoin, of course, as top choices. And this trend exacerbates during bull runs. According to Coinbase, this is just a logical progression of people feeling good about their initial cryptocurrency investment. Give me 1 second. And we're back. So before I left, we were discussing Coinbase and their statements that this trend of seeing individuals move from Bitcoin into other crypto assets during bull runs is just a logical progression about feeling good about their initial cryptocurrency investment. You know how it feels, when you bought Bitcoin for the first time and it's going up and you're feeling good, and you are the smartest person at the water cooler at work, let me tell you. And all those other naysayers who were talking about the SPY are missing out. So you begin to branch out and you look for other winners, right? Other winners that would fall into the same category as Bitcoin, right? And depending on your opinion, it's probably going to be basically everything else. And this was no more evident than during the 2017 bull run and the rally that took place in altcoin markets, beginning with Bitcoin's parabolic run and ending after Bitcoin's parabolic run. It took some time for the altcoin believers to cash out. Now, Coinbase went on to state that the inverse is also possible, right? And most likely, as prices drop and fear starts to grip the market, a flight to safety drives investors back into Bitcoin, bringing the OG cryptocurrency back to the forefront, while the hopium balloons quickly deflate for any alternative digital asset. And this was no more evident than was as seen in the 2018 bear market. Now, the report also points to volatility as another major factor responsible for driving investors toward non-Bitcoin assets, while also adding that the listing of new altcoins on the platform, of course, attracts investors to dabble in non-Bitcoin assets. Right? Just wanted to comment on that previous point, because again, you guys know what it feels like as well to have moved into altcoins and see Bitcoin dropping. And then you're like, oh, cool. I'm glad that I bought this EOS that isn't dropping yet. And then EOS drops twice as much as Bitcoin. And you're like, oh, why did I ever trade my EOS, my Bitcoin for this worthless EOS? Now, Coinbase concludes that Bitcoin is, of course, king of the cryptocurrencies and is likely to remain king for a long time. Hail to the king, baby. But describes it as paving the way for thousands of flowers to bloom, in their own words. And this is really no surprise. Coinbase, of course, has been very pro altcoin from the very beginning. Going all the way back to 2015, Coinbase supported the Bitcoin XT fork, which was the predecessor to what was the original big block debate, which, depending on your point of view, either culminated in 2015 with the Bitcoin XT debate or culminated in 2016 with the UASF debate between BCH and the user activated soft fork of SegWit. So either way, but the big block debate was certainly coming to a head between 2015 and 2016, and Coinbase was supportive of, again, both the Bitcoin XT, which was considered an altcoin, and conversation was not allowed on Bitcoin XT on the major, Reddit boards, Bitcoin Talk and r/Bitcoin. And yeah. So Coinbase has had a very pro altcoin kind of mindset from the very beginning, and they've modeled their business, they've created their business model to be very supportive of altcoins. Now, overall, they suggest that consumer behavior indicates that investors are open to diversifying away from Bitcoin, but the industry for altcoins to succeed, for us to have a more successful kind of investing infrastructure for altcoins, is going to have to build better support and use cases for these alternative assets. Basically, just echoing my thoughts that speculation alone cannot a good market drive. The reason why you have in traditional markets this ability to diversify, the reason why diversification makes sense in the long run is because you have a lot of use cases for a lot of these. And unfortunately, still here in the crypto world, we still have a lot of, that's just unfortunately mostly speculation on most of these alternative digital assets. And again, some of them are valuable, some are more valuable than others, some have more attractive use cases than others. But I mean, think of it. We've got, over 5,000 cryptocurrencies, and the majority of them are going to fail. The majority of them are going to fail. Interesting to note, most cryptocurrencies don't actually die. They just get zombie traded back and forth on small time exchanges. But maybe, again, that trend will change. We're only 10 years into this cryptocurrency experiment. However, and again, regardless of what people think, I don't really think that a lot of these coins have solved a lot of the problems that people would point out in Bitcoin. It seems that the biggest problem that people could point to is scaling and potentially anonymity, which there are solutions for right now. Now, Let me know your guys' thoughts and comments on that in the section down below. Highly appreciate it. You know, how do you guys feel about diversifying into altcoins? You know, is Bitcoin king and you should just hold Bitcoin, and if you want to get more exposure, you can leverage trade? Or, you know, are you into the altcoin hype cycle? Which, you know, hey, we cover quite a lot on here. Oh, our last little news nugget of today is going to be this article from News BTC and 3 recent incidents that prove Bitcoin is better than gold. And we just lost 10 Goldbug subscribers, and that's totally fine. Very, very positive and bullish on gold. But Bitcoin is on another bullish tear over the last few days. It's just tested yearly highs at the $10,000 level again. And Bitcoin has seen its price explode now. So it's actually put in year-over-year end gains from the very lows of the March meltdown, up over 100%. Meanwhile, on the year-to-date time frame, Bitcoin is still up over 30% from the price action we saw in May of last year. If Bitcoin was a traditional equity, that business would be worth more than Airbnb or Adobe at its current market capitalization of about 175 billion, that's Billy with a B, dollars. But as Bitcoin develops its use case or value proposition based on being scarce and therefore a store of value because it's unconfiscatable, of course, it's impossible to not mention this sort of competition with the precious metal gold, whose market cap is in the trillions of dollars, making it worth more than any individual stock or company in existence. But of course, there's a lot of similarities between gold and Bitcoin. And, you know, some would suggest that they're going to have a showdown. I don't know if that's necessarily, you know, if that's necessary. Unfortunately, a lot of gold bugs, you know, continue to hold to this idea that Bitcoin is a sham. Unfortunately, I've seen lately this kind of trend where Bitcoin advocates are saying that gold is also not valuable, that it is going to go the way of the dinosaur. I don't think that either of those arguments is true. I think that Bitcoin has a strong value proposition and gold has a strong value proposition. Gold has its historical legacy, also the fact that it is very difficult to counterfeit. And Bitcoin is Bitcoin, right? It is impossible to counterfeit. We know it's max supply. You know, Anthony Pompliano points out some very good points. Nobody knows the exact amount of gold in existence. Nobody knows how much gold was dug up out of the ground today. It is very difficult to measure, whereas with Bitcoin, the mathematics are more simple and clean. However, you can't deny the value propositions of gold, that, of course, it's been around for thousands of years. It's held its value. It can be utilized in industrial applications. It can be utilized in jewelry applications. It is beautiful to look at. Potentially that's why the aliens came down to Earth, whatever. For one thing, however, they do both behave as safe haven assets against geopolitical and macroeconomic risk, right? These are assets that we are seeing. Obviously, gold has this kind of bearer of being a safe haven asset. Like that's its an original value proposition or role in the markets, one would argue. And Bitcoin, we might see, as I've seen throughout time, although coupled to the S&P 500, tops and bottoms below it. So we can see that kind of, you know, those who use Bitcoin as a leading indicator for the S&P 500 can hedge very nicely against the declines and swings of the S&P 500. And again, the main argument is that we will eventually see Bitcoin decouple from traditional markets like we might be seeing right now. Another similarity between gold and Bitcoin is that both are considered speculative investments, right? You know, this is the main argument. If you go to a traditional financial advisor, they'll tell you, well, both gold and Bitcoin are speculative, and again, because it's true, right? Obviously, I would say that gold is less speculative than Bitcoin because it does actually have real world industrial applications as a commodity in and of itself, whereas Bitcoin does not. Bitcoin's value proposition is that other individuals, and one could even say that Bitcoin's value proposition is the greater fool theory, that Bitcoin will always appreciate in value because there will always be someone in the future that is willing to pay more for it, depending on the circumstances surrounding Bitcoin. And the value propositions of Bitcoin that lend credence to this are, of course, its scarcity, its unconfiscatable nature, its portability, its security, all of the things that we've talked about with Bitcoin a lot. But Bitcoin doesn't have any real world commodity applications besides being a store of value and a medium of exchange. So again, the United States dollar is the same thing. One could argue a speculative asset because its value is derived from the faith of its user base, right? What gives the United States dollar value is the faith of individuals that transact with it, that other individuals are willing to accept it in exchange for something else. Other thing, obviously things about the United States dollar is that it's, easily divisible. It's easily, it's portable. It's easy to transact. But of course, the digital entries in ledger books and the physical paper notes are worthless in and of themselves. They do not serve a large commodity product, except maybe as compost in the case of the linen dollar bills. And last, both, of course, tend to portray themselves as scarce assets against inflation worries, both kind of having this deflationary characteristic where Bitcoin is mathematically deflationary and gold is considered deflationary because of the difficulty to pull it out of the ground, because it requires investment to pull it out of the ground. Similarly, Bitcoin requires investment to mine it digitally. Now, despite this, many gold bugs and cryptocurrency naysayers are, continue to hold up this idea that Bitcoin is a scam, right? A lot of, very influential advocates of gold as a hedge are, very, very against Bitcoin, which doesn't really make sense to me. Of course, Peter Schiff being I saw something that made me laugh so much the other day. Somebody posted on Twitter, who's your favorite Bitcoiner to follow on Twitter? And Bully replied with Peter Schiff. It's the greatest thing I've ever seen in my life. And again, a lot of individuals who are really strong advocates of gold say that Bitcoin is a scam, even though we've seen Bitcoin grow astronomically and it's now almost 11-year lifespan. And as time passes and this current economic crisis continues to take its toll on our economy, it seems that Bitcoin is coming in and proving that it's stronger and stronger day by day, regardless of where the price is, right? It just seems that every time a convincing argument may or may not be made, and this is not really convincing, not to people who have done their research, but every time you see an influential article against cryptocurrency or Bitcoin in the mainstream, it just is, Bitcoin's like, oh, okay, I see you over there, Peter Schiff, and decides to pump 20%. And of course, it's in the current economic environment and climate that we find ourselves in that demand for these assets happens to be rising across the world. It's rising for gold. That's the oldest safe haven asset in the book. However, and what this article seeks to point out is that gold has some shortcomings in the modern world. These are things that Bitcoin enthusiasts are now taking the opportunity to, advocate and incentivize conversation about in the market, in the forums, in the marketplace of discussion, right? So we'll kind of break down this article and look at the 3 reasons why this article thinks that why Bitcoin has a more attractive properties than gold. And the first thing they point out here is that non-USD oil deal. Oh no, I have registered account on Bit Casino. Oh no. Oh no. All right, so first off is the international oil deal that was not settled in USD. So 2 nations that have found themselves in a fairly deep hole recently, thanks to ongoing sanctions that have been placed on them by the United States, have joined forces last month to create a private commercial and financial agreement between them. This is, of course, Venezuela and Iran. And Venezuela's, some would say, non-democratically elected president, Nicolas Maduro, sent Iran about $500 million worth of gold via jets in exchange for Iran's help in reviving their battered oil industry. So Bitcoiner Stephen Cole pointed out on Twitter here, pretty, again, lucidly, that Maduro must have spent a small fortune moving this 9 tons of gold across the Atlantic Ocean and halfway around the world in order to get it to their new economic ally. Pointing out that had that $500 million been moved via a Bitcoin transfer over the Bitcoin network, the Venezuelan president could have had the money there for less than $3 in fees in as little as 2 confirmations. Think about this, and this is something that senior analyst Alexander covered very sublimely in his recent presentation on stocks to the premium members in last week's community mentoring session. it was 2 weeks ago, where he talked about how, originally, if you look at the original creation of corporations, you were kind of investing in ships, honestly, right? And it was very, dangerous to invest in ships, and this is why this idea of shares was created in the first place. The very first corporation was the East India, the East India Corporation. So this is one use case that demonstrates how Bitcoin is clearly cheaper to move and transfer, and saves you a lot of logistical nightmares of dispatching a dozen jets with the gold aboard, and maybe them getting shot down and needing military escorts that are needed to go with them. I mean, have you ever sent something extremely valuable in the mail? Like, for example, let's say you had let's say your net worth was like $150,000, and you had to withdraw $100,000 in cash and send it via the mail. I mean, you would be sweating bullets every night until you got the confirmation on the other end that they received that package. Even if you sent it through like FedEx or UPS, you would still be sweating bullets. And I don't sweat bullets when I send transactions across the Bitcoin network, right? So reason number 2, give me back my gold. Getting back the gold that is sitting in other people's vaults is a problem, right? Venezuela was already in trouble before the coronavirus came along to spread its tendrils across the current global economy. And they were leaning even deeper into their gold reserves to just stay afloat, in the face of the ongoing United States sanctions. Now, while they were sending some of the gold kept on hand to Iran, Venezuela was also requesting that the third-party custodians of their gold, right, which were not in Venezuela, they were requesting that they sell the precious metal that they have, being held in custodianship, in order to raise cash for the troubled nation and to forward those funds to Venezuela immediately for their disposal. But sadly, with the sanctions, Venezuela is pretty cut off from their gold reserves, which are held in vaults owned by multiple foreign financial institutions. This includes the Bank of England, among others. And as such, for example, the Bank of England has refused to hand back the 31 tons of gold that they are holding in reserve for Venezuela to the current political regime in Venezuela, because these Western superpowers do not see Maduro as a rightful leader of Venezuela. So they have refused him access to any of Venezuela's foreign-held gold. Now, I don't want to delve too deeply into the politics here, because while I do certainly agree that this is not a good choice for the country, I find it very convenient that they decide to not release the gold simply because they think that the dictatorship is illegitimate, right? And again, I don't want to get too deeply into this because this could quickly become a very controversial subject. But it's just, this shows the danger, right? You can see it with nation states, and of course, you can translate these issues that nation states have into the individual, right? So obviously, Venezuela is dealing with a cratering oil market. Oil representing the large majority of their wealth, and Maduro is literally pleading with the Bank of England representatives to sell their gold to the United Nations and pass along the money to the country, but that request has mostly been ignored. So Venezuela as a country has all of this gold sitting in a vault somewhere that the custodians of the vault will not release to them. And this leaves emerging nations and their central bank with a pretty lasting lesson, right? Anything that is yours is not really yours until you have it in your hands, and that you shouldn't trust the international banking cartel with managing your nation's gold reserves. So Bitcoin, of course, is better in this regard. The cryptocurrency stays with its owner, locked in a digital wallet, protected by an uncrackable 16-word seed key or private key, depending on how you set it up. So in a scenario like this one, Venezuela's unfortunate circumstance, if they were just keeping Bitcoin on hand instead, it would be a whole lot easier to open up that digital vault and sell what's needed online cheaply and easily from behind a computer terminal, rather than having to plead and cater to the Bank of England. All right. Third reason here is faster recovery, the fastest recovery of all of the assets, because we all know by now that Bitcoin has recovered faster and stronger and harder, somebody play that Daft Punk, since the March meltdown than any other traditional asset, even against gold's impressive 15% year-to-date March. Bitcoin on any time frame has been the most bullish asset in an overwhelming sea of red. And it's not just Bitcoin's price, but this overall global trend toward digitizing money itself. You know, society moving into a post-coronavirus world, which is going to look very different. Physical contact being made taboo, social distancing becoming the new normal, vaccines being pushed on individuals. You know, the human race, human society is quickly adapting to operate digitally more than ever. And this is why you're seeing Bitcoin's use case exploding recently, because it is the most logical choice for adopting a worldwide currency. And also why you're seeing this trend towards central bank digital currencies, because no central bank wants to get left in the dust. You know, this international banking conglomerate does not want to get left in the dust, particularly when a free market alternative has been created that really stands against their supremacy. So rather than leaving your house in order to physically move your gold from one hand to the next, you could just transfer Bitcoin pseudonymously from anywhere in the world, from one wallet in cyberspace to another. Being able to transact remotely, anonymously, and trustlessly is just not possible with gold the way that it is with Bitcoin. So let me know your guys' thoughts and comments in the section down below. Is there something that we missed? Is there something that this article missed? We injected our own thoughts and opinions into this, of course. You know, is there a use case for gold that we're missing? Obviously, digitizing gold tokens is an idea that many have decided to pick up and run with. But again, if you just look at the market, you can see overall, I think the market's decision. The market has not been very excited about digitized gold. The market has been excited about digital currency, which is Bitcoin. So again, let me know your opinions in the comment section down below. Do you agree with the author of this article? Do you disagree with him? Did we get it right? Did we get it wrong? Let me know your thoughts. With that being said, guys, that ends and wraps up our cryptocurrency segment of the day. We'll take a few questions. And the first thing that I want to do is, of course, thank our viewers over there on DLive by cracking open our own vault of lemons and making it rain. I did see a super chat here, and I am sorry that sometimes it takes me a while to get to these. Zuhair Nakvi asking me to take a look at Bitcoin on the weekly, in particular looking at Parallax. Sure, my friend. All right, so let's track weekly Parallax signals here. Here we have the all-time high in 2017, and we had flipped bullish on Parallax down here after flipping bearish here, so about a couple weeks of chop, and then we have a nice prolonged movement. Parallax flips bearish here on the 8th of January, right around 13,000. And flips bullish at 3,800, so fantastic signal there. Remains bullish throughout this run and does flip bearish at the local top in the 22nd of July. Flips bearish over here in August of 2019 and keeps you here until here. So it does get you some, about a couple $1,000 movement. I think we get chopped here, we get long and then out here, and we did flip bearish throughout this whole movement. And I've just flipped back bullish again. Let's see here. And we can kind of see this in conjunction with MVIX as well. Let's take a gander here. MVIX remaining kind of pegged throughout this whole cycle. So I quite like this. Looking at the qualitative differences here, I think this resembles current price action a little bit more. So 1, 2, one chop here. All right, so if we look at the weekly signals going back just to right before 2017, we have one great signal here that leads to a prolonged bull run. One great signal here that leads to a prolonged bull run. The short signals are obviously quite good. And then over the last, let's see, since, in 2020, I would say that we've got weekly parallax has gotten us chopped up a little bit, right? Of course, it would have signaled to go long here. And without kind of an exit system in place, we just don't really have a lot of weekly movements. And then we get flipped short on this candle. Not a big loss, actually. What, like maybe a 5% loss? And then we do get a big sell-off, but we don't really get to capitalize on that because if we're just flipping, if we're just flipping bullish here, that really represents another 6% loss. So I think this is certainly worth it. We talked about the weekly previously, breaking above here and the breaking Bitcoin system leading to a nice run, calling it a little bit better, I think, than Parallax. Because giving us that nice profit opportunity with the exit signals, signaling for the exit short and the exit long here, actually indicating to be long on Bitcoin from either the week of April 2020 or the 27th of April 2020. So I certainly think that is worth a shot. Let's keep an eye on that for the weekly close. Obviously, running the numbers, I think that they're better. So we have 1, 2, 3, 4 to 1, 2, 3. So that's that's 4 really good, and I'm not even taking it back before that because I think it's obviously right more often in the previous historicity of Bitcoin as well. If we take that in conjunction with the baseline, so we'll just keep it very simple. If we take that in conjunction with the baseline, I think we have a good invalidation area. So looking at the weekly time frame, looking at the weekly time frame, I certainly think this is worth a shot. This is a long-term, this would be a very long swing trade, and you're not really in the optimum entry area. Having said that, I would prefer to wait for a pullback, but it's certainly okay to consider a DCA. Remember, these are going to be long swings. You're looking at a 24% drawdown, though, if this trade is incorrect. Of course, if Parallax just flips, we only see that occur really one time, and that's right here, where you get one signal, and then on the very next signal, that's a 10% down movement. So higher risk, higher reward, not the best signal I would like to see. You do have MVIX confirmation, though, as well. You do have Parallax confirmation. Let's see, we are 1, 2, so let's see, 1, 2, 3. So we're on the third of that. So that would indicate to me to use 1/3 reduced risk, i.e. 1/3 of your traditional position size if you're going to be taking a weekly swing trade. I would be more aggressive if we were within the optimum buy zone between let's call it 73.56 and 87.79. So if we can get back down below 87.79 and get a pullback, basically back down to the upper boundary of the, actually it'd be to the lower boundary of the red box territory would be more attractive to me, or the upper boundary of the yellow box territory. Of course, if we do end up cracking the yellow box point of control, we might even see back the truck up prices. And that's overall what I was expecting to see. I was expecting to see a 30 to 40% drop in Bitcoin's price following the halving, and then rallying from the yellow box territory to crest new all-time highs. So far, I mean, this is going to take some time, and this is going to take several months to play out the way that I expect it to play out. I've set my orders. And I don't have, it's going to depend on your combination set. Parallax is going to work better in conjunction with something else, but just looking at it through the lens of the, baseline, let's take a look at what Quadriga would be suggesting for TP targets. 11,039, 12,465, and 13,888, which would set us up pretty nicely to come up here and test slightly above the upper boundary of the current value area of Bitcoin. So that would be like this zone right here, which of course is going to be our previous high and is a logical area to take profit. So I see some good conjunction with that. It's not a trade I'm going to take, but I can see the strength. I can see the validity of that. And thank you guys so much for the 50 likes over there on YouTube. You guys are very, very much appreciated. Thank you so much for getting our content out there. Logan says, how does the UBT chart look? I like UBT. I like UBT too. Before we do that, let's take a look at gold. Gold looking good on the weekly time frame, getting some nice weekly continuation. Let's see here. We crest above the baseline back here. Parallax comes in the very next candle. We have quite a bit of leg room. Parallax does go bearish here and actually gives us a weekly take profit off this. I do remember big volatile, weekly swings here in BTC. In gold. But we do get re-entry right over here at 1684, and we basically the ability to ride that ever since, and still in the optimum entry area with a nice rising explosion level. So good rising volatility. Overall though, EL is, we reached crests on EL prior to this, so that's fine. I don't have any current trades in for gold. I just have my long-term positions, which is, I don't really consider my physical gold to be speculative because I hold it as hard money, very similar to the reason why I hold spot Bitcoin in cold storage. But I do have what I would consider like long-term speculative investments in gold, which would be like SGOL, for example, right? And GLD. I am long on silver. I do have a trade on silver. I am long on ZAG. Let's look at the daily for gold. Yeah, gold's not quite there yet for me on the daily. We need to get above 1736. So let's see if we can continue to see this push. This would actually be setting up for ARBB. So going for a breakout of consolidation here, I would like to see some more confirmation before seeing that, because if we just looked at this from a traditional perspective, we could see some potential breakout right here. Symmetrical triangle following a move into the upside. Here's a nice break. And what I'm really going to like with my system anyways is, I don't know what I just closed, is the fact that I'm basically going to necessitate a retest, so basically a break pullback continuation type setup before looking at that setup, before looking to take that trade. So that makes my decisions easy. Big winners over on DLive, Midwest Attempt, Squeaky Tadpole, The Pie Guy, Dark Rico, and Ron Legato. Challenged Investor says, a big breakout in gold when velocity of money comes alive from the dead. The sound of money being made. Affiliate asked to check out cotton futures. Continuous contract in front on the daily. Yeah, I like cotton. I would have, cotton gave us a couple entries. Main entry here, which would have been a break-even trade, and then continuation here, which led to a nice run-up, and overall an exit here. So a good, nice swing trade from here to here. Overall, it's had us flat, and we are consolidating between the initiator and the baseline. We need to see price close above 58.88 on the continuous contract in front for me to want to look at taking any gold risk to the upside. MVIX is fairly non-committal here with a recent cross under, and Parallax is bearish below the zero line. So cotton is not what I'm interested in right now. All right, so SDAO trading nicely for the majority of the day. So let's just take a look at the Dow. Yeah, putting in a nice, we can see that same behavior on the SPY futures here as well, but it was fairly short-lived. Fairly off the bottom, lower high, sold into, and especially after broaching a previous low here. Looks like long-term distribution to me on the SPY. Maxifier asks, do I backtest my hedging strategy together with my main strategy, or do I test them separately? The latter is true in that situation. I do test them separately because I want to be able, my trading results are going to be basically in one basket of speculation, whereas my hedging results allow me to know where I should hold my equity. All right, should I hold it in USDT? Should I hold it in BTC? And what should I do about my capital split? My capital split is generally 50-50. It sometimes shifts to 60-40. And that just generally depends. I mean, what I like about that is a natural market dynamic, because if I need more margin to take on more trades in Forex and traditional markets, that will necessitate that I sell off more BTC to have more available capital there. And if I need more margin to take BTC, that necessitates that I will naturally cash in more USD to buy BTC. So if you start at 50-50, you will get this very nice dynamic equilibrium that moves in either direction as your need necessitates. And that just depends. Like, I trade Forex just as actively as I trade cryptocurrency now, so I have a strong need for USD capital. You are welcome, Philly. Highly appreciated. Crypto Caveman says, do you think we see sub $6,000 Bitcoin this year? I think it just depends on when and if, I guess at this point, we begin to see this kind of, pronounced sell-off following the halving, right? So kind of all eyes on BTC. I don't know. I don't want to make price predictions insofar as how low price will go. That's not the way that I trade. I think that the yellow box territory, just kind of returning to the way that I look at things, the yellow box territory is a reasonable place for accumulation. If we should break down below this, then it turns into the green box territory. So overall, you know, where price will reverse, I don't think it ever happens at a specific price point. It happens when individuals take action in the markets. There's not a whole lot of untapped liquidity below us. You know, bulls have had multiple opportunities to accumulate before moving on to push price up to these levels. So there's not a whole lot of areas below us that really scream we need to retest these areas. You know, so the best that we can do at this point is just kind of try to pick out what are logical areas that buyers are likely to step in should price begin to free fall at these points in time, or if we see a large correction in Bitcoin's price as it kind of moves along with traditional markets. And that's going to necessitate, to me, the first logical area is going to be between 6,000 and 6,800, and then 3,300 to 4,000. And so I don't have a good, I don't have a good answer to that question. I don't know if we see sub $6,000 Bitcoin this year. I think that it is likely, if the trend continues as it is, long term, that we do see higher than $10,000 Bitcoin sustained by the end of the year, and particularly moving forward into 2021. I think that the halving, by reducing sell-side pressure on Bitcoin, does set us up for a long-term bull run similar to what we saw in 2017. And the retail market is picking up on this. So I think that if people don't have Bitcoin in their portfolio, they're going to be sleeping. They're going to be missing out. Thank you, Paul Robertson. Highly appreciate that, my friend. Forrest Bitcoin says, hey, Justin, can you take a look at the VIX M before you go? Thanks. Sure. I don't like trading the VIX, but if I did, I would be looking to go long. We've cracked the baseline and the initiator. We have a nice retest of the baseline today. Parallax is bullish. We have rising explosion level, and MVIX is above the zero line. So this makes a lot of sense to me. We've gotten some okay movements. This is a green candle, so we got profit opportunity there. Not so much there. And this one was a nice trade to the downside. So 2 out of 3 winning trades, and now our signal should be flipping to the upside. Buy, take profit, buy, take profit, buy, take profit, buy, and a little bit of profit opportunity there. Not too bad. The other thing that we can look at which a lot of people are going to be looking at. This is BTC USD on the daily. And it's unclear whether BTC is going to top here. We were in overbought territory here on the RSI for a little over a week. We've now sold back into what many would consider to be the bearish control zone, found support on the 20-period simple moving average. And if we do end up pulling from here, this will be no bearish divergence, but just confirmation of a lower high on the RSI. Chaikin money flow was in pretty steep decline and is now on the rise back up. But keep in mind, this is kind of the upper resistance band of money flow, so something interesting to keep our eyes on. So yeah, no bearish divergence. MACD's crossed under. Stokes came back to neutral and pointed up. RSI came back down to neutral and pointed back up. I mean, all of the kind of barriers are there, even looking at traditional charts for continuation longs. I would like to see how the daily closes, particularly with that kind of short-term, particularly with this short-term spiking in the premium on Bitcoin's price. So I would be pretty wary about that in the short term, going long on BTC. If the VIX is long, doesn't it mean to short the markets? Very similar to what I am already doing. And, oh, shoot. Not mean to do that. Doesn't seem. The much heralded Golden Cross. Keep in mind that these crosses have been pretty bad to trade. He had, of course, a good one over here, led to a nice bull market. And yeah, if you're a death cross right here, actually on a candle before you saw the Jericho, right? So here's the death cross right here. And then, man, you got punched in the face, 40% moving on BTC to the upside before you actually got the sell-off. Golden cross right here, basically at the top of the market. Death cross right here, basically at the bottom of the market. And here's your golden cross again. Will we actually get the 2019 signal to the upside, or is it going to be another top? Honestly, Profit Bear, I think that it's entirely possible that we've reached a local top. If we shatter through here, I'm probably going to get pretty bullish pretty quick. So these are some pretty important technicals that I've been watching for several years. And we're right there. Like, we're right at the decision-making point, right? So if we crest above and we start trading above the $10,000 range, really 10,200 to me, and we close the weekly up there, I don't know. I might be coming on the show with like pom-poms and streamers talking about Bitcoin to the moon. For right now, I'm trying to be pretty cautious. I am being pretty cautious, particularly with my position sizing and the trades that I'm working on. And I've already kind of front run the cryptocurrency markets in traditional markets and using FOREX to have something steady and consistently to trade between. And, you know, and it came, right? I had like a 3-month winning streak in FOREX where like I could not lose a trade. And I've had a 2-week losing streak. I had like 4 losing trades in a row, which is okay. Pretty happy about that. That means get it out of the system and good trades continue to come. Rocket ship to the moon. All right, with that being said, guys, thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Analysis, brought to you by the Cracking Cryptocurrency Premium Trading Group. If you are tired of watching price action from the sidelines and trading with your guts, if you guys would like to learn how to trade an objective data-driven strategy, and you would like to take advantage of mentoring, community mentoring, and one-on-one, our team of analysts, as well as our trade signals, our premium indicator suite, and everything that membership includes, make sure to check the link in the description down below or point your browsers to premium.crackingcryptocurrency.com. It also works on mobile. In fact, it looks sleek on mobile. Big shout out to Ben for making the website look amazing lately. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below, where we will do our best to respond to you. We have trained for this moment all our lives. lives. Oh, Lord. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Analysis. Make sure to stay tuned for our, well, not stay tuned, like make sure to like subscribe. Make sure that to stay on the watch for our video, our Breaking Bitcoin Bits video tonight. And huge shout out to Jack for the amazing thumbnails on the videos lately, as well as the Breaking Bitcoin Bits thumbnails. So huge shout out to him. Make sure to show him some love, guys, in the general chat in the Discord, which if you haven't joined already is the place to be, discord.crackingcryptocurrency.com. Woo! We made it, guys. We made it. Big shout out to Spectre Security Coin. Make sure to sign up for their data hunt event. And if you guys want to trade along with us, links are down in the description to everything you could possibly need in life, including the exchanges that we trade on and the services that we use and offer. With that being said, I will see you guys in the Discord. Trade safely. It's not too late to do something awesome today. See you guys tomorrow.